Hello and welcome. My name is Nasipo Nhlego and I'm the Technical Marketing Lead Specialist in the Investment Products team. Today, as the title of the video suggests, I'll be talking to you about why and how your clients can invest offshore. It is important to note that South Africa makes up approximately 0.5% of the world's GDP and a similarly small percentage of the MSCI All Country World Index. For many South African investors, they not only have their savings invested in South African companies, they also have a high country-specific exposure to SA via their pensions, house and salary. This is a high concentration for a country which makes up such a tiny part of the world economy. When creating a balanced portfolio, you can add returns from various sources by considering various asset classes such as stocks, bonds and commodities, sectors such as tech, financial services or health, styles, which refers to value or growth stocks, or size, small cap, mid cap or large cap. Investing offshore provides investors an extra source of return. Clients can gain exposure to companies in the US, Europe or Asia. Some of these global companies produce products we use on a daily basis, from Microsoft software and Facebook social media platforms to the many consumer products from brands such as Unilever, Procter & Gamble and Johnson & Johnson. The other side of the coin is that adding varied sources of return means that you end up with a well-diversified portfolio. And a well-diversified portfolio can lead to reduced risk. When you add assets which have a low or negative correlation, meaning they move in opposite directions, they can balance each other out when one asset class is experiencing negative returns. As Liberty Investment Products, we currently have two main product offerings that your clients can use to invest their money offshore. The first is our recently launched Global Limited Edition version 1, which is a structured portfolio available on the Evolve Investment Plan and Evolve Investment Plan Sinking Fund. The product offers a capital back guarantee. 2020 has reminded us that life can be very unpredictable. We felt that it was important to provide a guarantee, especially during these uncertain times. We'll add an extra 1% enhancement to initial investments over 1 million Rand and 2% for investments over 3 million Rand. Any growth in the underlying basket of indices up to 30% will be multiplied by at least 1.5 times for individuals and trusts and 1.32 times for companies. The exact multiplier will be confirmed after strike date. The underlying basket of the structured portfolio is weighted 50% to the S&P 500 and 50% to the Eurostoxx 50 capital indices. The structure is rand-based and will not expose your clients to currency fluctuations. There are three payoff scenarios for the product. In the first scenario, if the underlying basket of indices has returned 0% or less at maturity, then the amount invested in the portfolio will be returned to the client. Scenario 2 is for any returns on the underlying basket that are between 0% and 30%. In this case, clients will receive a multiple of the underlier's return. Currently, the multiplier is 1.5 times for individuals and trusts and 1.32 times for companies. The third scenario is where the underlying basket returns more than 30%. At this point, the returns in the product are capped, so a client could potentially earn a cumulative return of 45% over the 5 years, which translates to 7.71% per annum. These returns are net of fees and taxes. The second product is an endowment, the Liberty Offshore Investment Plan. The main benefits of the product are providing global diversification at a low cost. The portfolio list for the offshore investment plan includes tracker funds which have low fees. Investments in the Liberty Offshore Investment Plan are a lot less complicated because they still fall under the South African legal jurisdiction. This means that should your client pass away, their loved ones don't have to comply with any potentially complicated or costly foreign legal requirements. The preferential tax rates applicable to the offshore investment plan will work to the advantage of any earner in a higher tax bracket. Also, investors will not be adversely taxed on currency fluctuations. Clients can find comfort in knowing that they can specify that the nominated beneficiaries will receive the value of the investment directly should they pass away. The investment will be dealt with under South African rules and can be transferred into an offshore or local bank account of their choice. We know that investing offshore can seem daunting, but the benefits are significant and Liberty provides some simple ways to do this. Please feel free to speak to an investment specialist for further information and thank you for your time.